Welcome to TradeTheNBI.com. This is John. This report is for the 26th, and a little bit of a retrace going back in here, and this is an interesting one. If we look at our daily here, we can see, well, we've had rising shakeout, and that's still looking decent. We ended up with the orange caught in that zone that I talk about, where you get between the cyan and the red, and even though it was only for briefly, it still created enough of a little bit of a downdraft. Now, all it did was come back and basically fill in the space of the near positive extreme. I mean, we got, what was the reading for that? Let me look at it real quick. Minus 775. So it was almost at a positive point. That's why it's yellow. It warns of a little weakness right there, and that's fine because it filled back in there. Still, red kind of flattened out, and we're at the key point of the zone. It's minus 760. We didn't cross the 7.5. That would have been the impetus to really give a push to the upside. So more sideways, which is not surprising given what we're looking at from the election. We do have the positive extreme here because you can see the NQ did get a little overbought, so a return back to that 48. Not a big deal either, but a little bit stronger because you had the cyan underneath it just now popped back above, and that gave a little bit of that decay, but you didn't see the orange cut between the zone. You just see a trail off of short-term buyers and sort of flat for midterm, and your long-term is sort of just eased into the situation. They're not really running from it. It's more of a wait and see, and that's typically what we've got. We need to enlarge that chart just a little bit. There we go. And the Dow, you can see from a daily standpoint, doesn't show the new futures coming in there, but you can see it is caught between the cyan and the red on the DOC, and that suggests a little bit more continuation of that weakness until it pops out, but you do have more positive shakeouts. So a lot of little mixed readings in some of this, which is why we're just going sideways. That's exactly what we're doing. Europe caught right in the middle of that range. It's based off a little bit, needs a little bit of a recovery here. We've had newer lows on rising extreme histograms. Shakeout still following those, so I'm not expecting a whole lot from any move at this particular point. It's just been beaten up. Likewise, TLT, same thing. Shake out below the yellow line right there and caught right in the middle of the zone. On the DOC, USO, I'm not sure how that got converted. Should have the shakeout on top, but anyway, a little bit of a retreat. It had the positive extreme almost reached right there, and then you had a couple others a little further back, all the way to here, which that would be your potential furthest. Obviously, ABM is the number one play. 1137 was the number, but in the DOC spread, short range, had a couple little tip pops, but you never had a move of the steel to rise. So you can see where you had the positive move with the orange, but you had no support with short-term buyers, and that's why it started to fade. Just that simple. And gold, starting to put in the bases, still, again, caught right in that range, so I'm not looking for it to do a whole lot of anything until we see that orange either break down below. The actual steel's in a good spot for it. We had the similar situation right here on this pop, but it couldn't produce anything because the steel's way out of range. Whoops, too many clicks. Way out of range, couldn't get down below to give a trigger move on that configuration. And from a case standpoint, you can see that we've pretty much come back. This had a positive extreme here. Now we do have the last dip below the red line, which is right over here. That would be your potential low target on the ES 2123 as we dip below. That would be an indication that some money is recognizing a change in the political landscape. It's still too early to tell, but you're going to start to see a tightening of the polls. It's just a given, and that's going to cause some people to hedge and do various things, so I would expect some more volatility. Needless to say, still right in the middle of a short cycle right here for the ES on this little brief breakdown here. Kind of had a continuation move here where you can see most of the orange spent its time caught between. We ended up with a couple of brief buy signals that just came through, and then interestingly enough, you ended up with immediate return of the orange right back inside of the red to cyan range, and it pretty much stayed there all the way through until right about here. It popped down briefly for a moment and came back up, and that's when it started the breakdown right when it was about to trigger what would be a decent long setup, except for the fact then we started breaking down well below the shakeout. And that's pretty much where we're at right now. I would expect this to come back up. It's just a matter of clearing out stops, finding out where the bottom was, and turning back up into it. The extreme looks pretty decent at this particular point, so probably be even by the time market's ready to open. But actually, any further political developments can and will have, well, I think, dramatic impact on where things go. Still, the bias is upside bullish, and I would be taking advantage of buy signals as they pop in. So that's the general view of things at this particular point. As always, though, we're going to get intraday signals that are going to give us impact at this point, with the short algo leading and no crosses above it at all. Right here was the closest we had right before it really started to break down off of DOC spread right here. I actually didn't even reach that because of the red, nor even dip below the red. It just got to the point where they met and boom, broke away quickly, and hasn't really had much help since then. We had a brief little moment here where we started to get some rise, but we're caught in this no man's zone. I call it between this negative 13 and the negative 7.5. When you get crossovers at that particular point for what would be buy signals without dipping under the negative 13.5, they tend to have much weaker results. So even anything turning around right here, unless it gets a little further oversold, problematic. That's sort of a normal course of things. No change from the blind hawk in that. Those are going to have much bigger stops, so those aren't really affected by this. We had the predator hawk, and we had two views. This one doesn't take the blind hawk. Part of its setup a little bit different. Each one gives you a little bit of variability. That variability adds to the success, generally the way it works. As always, though, continue to look for me, though, on the Skype chat. I'll keep posting charts as warranted and anything interesting that pops up. It's going to be a fun 2 weeks going into the beginning of November. Not to mention, earnings and things like that always adds excitement to it. As always, though, trade well.